Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth stock analysis on Pfizer. The reason for this is they do have earnings coming up Tuesday, so it's a good idea to kind of get an idea of price targets we're looking at, where we can see it moving off earnings, and when it does make these movements, where we'd be looking to buy, where we'd be looking to sell / short. So to get straight into it, we will kind of go onto a clean daily chart. We like to use these just so we can see is there any gaps that need to be filled, and right off the bat we can actually see there is actually a few gaps to be done on Pfizer. So if we quickly go over here, we can see a key gap kind of down at this $43 mark. We do have this gap here, but I tend to like to just get the complete gap fills because we're using these as profit targets, not so much as entries. So we tend to just find where we expect the biggest bounce to be. So really that's going to be the biggest one we're looking at. We will actually place these as support lines. The reason for this is just because when price is coming up, we would expect to see some sort of movement happen here. Doesn't mean this will be the bottom or that will bounce here, but we would just like to keep an eye on it. So actually with this one we can instead highlight it as it's more just something we want to keep an eye on as price comes into this level, and then where we expect the actual bounce to be would be at this 43.80 mark. So we can now go back onto the standard deviation charts, because this is where we are going to have the majority of our targets, and we can see currently Pfizer is a bit below the statistical mean. So it's more it's more towards its lower deviation. So this does mean we do have our buy targets at $48 and $49.75. These are both if earnings doesn't push it too much, but it does sell off. These are going to be our low risk buy zones. Now if earnings are a bit more reactive and push the price down further, then we would be having a target, as you can see, at our gap fill at 43.80, as that also lines up with our second deviation on the 4-hour chart. And then if it does continue that bit lower down, then we do have another one at around $41 as I see second deviation on the daily. And again, if it pushes off even more, then we do have buy entries at 37 and 33.75. Now one thing to take into account, as we have been seeing with earnings quite regularly, well this time, is that a lot of these stocks are getting very volatile on earnings. I mean, for Netflix for example, started off so heavy it's come down and kind of came below the third deviation, so this provided great buying opportunities. We're seeing it currently on Facebook. Facebook hasn't yet had the bounce we would expect to see push it back towards or back within the deviation channels, but that is one thing to keep an eye on just in case we do see it on Pfizer. If it does even come below or if it opens up below these third deviations, then these are considered low risk buy opportunities, whether you're looking for swings or investments. If you're looking to day trade it, then obviously you have to kind of work out how that fits your trading plan, but on swings and investments, it usually will provide a good buying opportunity if it continues to sell off. Now, where are our shorting / selling opportunities? Obviously, if you are long anywhere below $50, our key targets are going to be $55 and $56. Reason for this, statistical mean. We don't look to hold past statistical mean because we always expect stocks to reverse to its mean. So once the stocks reverse to it, then it's a bit more of a gamble whether they go up or down. So that's what tends to be why we lock in complete profits at that level. But if you are holding past this level or you're looking to get short, then we'll start using these upper deviations. So 62 will be a key level, 68.50 and $69, $74.50 and $76, again another level, and we wouldn't expect it to go past here. But either way, these are all going to be our key levels to be looking at. So again, on the downside, we're looking to really buy any of these opportunities apart from kind of the $46.50 and the $46. They're more, if you're short, areas to be locking in, and just an area to be kind of looking out for if price does come down to this level. If you are long, we want to be locking in profits no later than $55-$56 because that's statistical mean. And then if you're looking to hold past this level or you're looking to get short, 62, 68, 75 are going to be those key levels to the upside that we're looking at. So that is a breakdown on Pfizer, or at least a technical analysis side of it. So I hope you enjoyed the video. Hope to see you in the next one, and that's it. Peace. It only takes 4 or 5 seconds for a